Bring in show music, please.
This is Squawk Pod from CNBC. I'm producer Cameron Costa, and on today's episode, Boeing union workers go on strike for the first time since 2008 after overwhelmingly rejecting their contract.
What shocks me with this is how out of step not only the company was with the union rank and file, but the union leadership that actually negotiated this.
And it's China Week on the Hill. Congress is making a policy push, but Democratic Congressman Raja Krishnamoorthi says do better.
I think China Week was weak on China.
From his perspective, more is needed.
This is not lost on the Chinese Communist Party. They believe that we're hopelessly partisan, hopelessly divided, and tribal.
Plus, some companies are rolling back their diversity, equity, and inclusion policies. President of the Human Rights Campaign, Kelley joins us to respond.
This is not where the majority of the companies are. And it's not just out of the kindness of their hearts. It's because they know that this is what the workforce and consumers demand.
Those conversations and much, much more this September, Friday the 13th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. The big inflation data points of the month are out of the way at this point. We've gotten 2 of them over the last couple of sessions. Now the markets are getting ready for the Fed decision that comes next Wednesday afternoon.
We start with some breaking news on Boeing. More than 30,000 workers in Washington and Oregon officially going on strike.
This is about respect. This is about addressing the past. And this is about fighting for our future. We strike at midnight.
The work stoppage is going to be halting production of most of the company's aircraft. So that includes its best-selling 737 MAX. Boeing releasing a statement on the union vote saying, in part, quote, "We remain committed to resetting our relationship with our employees and the union, and we are ready to get back to the table to reach a new agreement." The strike delivers another blow. How many can you have against Boeing as it works to increase its output, improve its reputation? Boeing's last worker strike was in 2008. It lasted 52 days, cost the company an estimated $100 million per day.
I was thinking earlier this week, we heard how many planes whenever I hear how many planes they plan to make a month.
It's amazing. It boggles the mind.
Boggles the mind. I think it was like 50 or something. Think of those planes and what it goes. So this is a major amount of people that aren't going to be doing with it. I can't imagine making more than one of those a year. I mean, just everything that goes into it. So the idea you can make 50 a month, that's a big workforce, and it's a lot of people working their ass off. I mean,
what shocks me with this is how out of step not only the company was with the union rank and file, but the union leadership that actually negotiated this. I mean, 96% of the rank and file voted against this contract. How does that make it to that point where you even see this? You had Kelley, the new CEO, who was pleading with employees not to go on strike. You realize you're in a very weak position when you are pleading with them not to go on strike and to accept the offer you've given.
They look around at
40%
autos and also cost of living. If it's up 20% and they get a 25% raise over 4 years, it's
the thing that really kicked me, I didn't realize until digging a little deeper into it, they get that 25% raise over the 4 years of the contract, but at the same time, they will no longer be getting bonuses, annual bonuses that they had been getting before. So, you're increasing your pay 25%, but taking away the bonus structure is...
Plus, as a rank and file, you'd have to look at how management has navigated the last 3 or 4 years, and you're proud of where you work, you're proud of Boeing. Who wouldn't be proud to work at Boeing? And they've totally screwed the pooch. I mean, it's just really not been good what these guys have.
I think what we'll have to talk to Phil more about it and some analysts potentially too. I think the number that they were looking at with this increased pay that they were putting and benefits into this, I think it was going to be something like a $900 million a year headwind that the company was going to have to make up for.
Right.
Now you have to wonder how much they're going to have to offer to get something that the rank and file would get behind.
And how much this is going to actually cost them
on a daily basis. Right.
And it's such a big part of the U.S. economy. You wonder if it did go 100 million a day. What is it? You could probably find a GDP number that's not. You don't have to go out that many decimal
Right. If you're going to look to Taylor Swift for potentially moving a GDP, I think Boeing could have a pretty significant impact.
I think she owns a
pretty quickly.
Boeing jet too. I think. Speaking of.
The future of Fannie Mae and Freddie Mac could be determined by who wins the White House in November. The Wall Street Journal's got a fascinating new report this morning saying that former Trump administration figures and some bankers have been discussing plans on trying to end U.S. government control of the mortgage finance giants should former President Trump win the presidential elections. According to what they're calling people familiar with the matter, the talks have been underway since at least this past spring, include reaching out to investment managers for advice on how to get the deal done. Trump confidants, including former NEC Director Larry Kudlow, is apparently behind some of this. Former Director of the White House Presidential Personnel Office, John McEntee, among some of the others that are involved. Trump campaign saying former president has never said, though, anything about this throughout the race. Bankers estimate the stakes in Fannie and Freddie could be valued at hundreds of billions of dollars, which is one of the reasons they'd want to do it. Also worth noting, John Paulson and Bill Ackman have major stakes in Fannie Mae and Freddie Mac, and of course are huge supporters of his and have been sort of behind the scenes, I think, pushing for some of these things. I don't know what you guys think. I have sort of very mixed views. Part of me thinks it should be privatized, and if we could get some money for it, great. Part of me thinks we privatize it, and if it goes bust or goes wrong, we'll socialize it all over again.
Exactly. That's
the
problem.
I don't really know what the right answer is. Also, by the way, Fannie and Freddie make an enormous amount of money for the government right now. Yeah. So effectively what you'd just be doing is pulling forward some of those gains.
Would you consider it too big to fail just in terms of what happens for...
It represents 40% of the mortgage market.
It already would have failed, I think, a couple times, probably. But
so then that's the point. It's never going to be able to be privatized and be able
unless you were to split it up into 5 different smaller versions. But I don't know how that would work.
Is it like a breakup, like an AT&T breakup type sort of
But couldn't it be if it was well capitalized enough with like crazy capital requirements? Couldn't you make it? But then it's much harder. Then you can't lend as much.
And then if it's got crazy capital requirements, you can't do the other part of the service.
You're not going to get the big valuation for it.
And it's not going to serve its purpose, which a lot of people would say is really important, the purpose that it serves. But the Journal called it a Gordian knot with the government. It would be the bankers. They got to go back to like 90-hour weeks, the ones that would be working on unraveling this relationship right now. They need to go.
There's been some who've been trying for a long time. And by the way, as I said, but like Paulson and Ackman and a number of others have been in this stock forever.
Can you imagine
waiting
the
for
fees?
This moment?
Wall Street wants to do that. You can imagine the fees. Wouldn't it be the biggest? It'd be the biggest in history if it were just go public. It'd be $100 billion minimum.
But if you've got the guarantee from the government essentially for forever, what's going to keep? Well,
then the question is, could they do something to the company so that it doesn't have the guarantee? But if it doesn't have the guarantee, right?
It doesn't matter if it's 40% of the market. It has it whether you guarantee it.
I'm old enough to remember when it really was like a growth stock before it went to like 30 cents or whatever happened throughout history. But I owned it, and it was like 40 or 50. It was like a growth stock back then.
By the way, there's other people who think that it was a gross over extension of the government
to bail it out.
To take it, and people think it's been stolen. Right. Some people think it was one of the great robberies of the 2008 financial crisis, in some ways. And if you actually go back and look at how much money, as I said, that the government has made effectively off of taking it over, that's interesting too. So there's lots of sides to the story.
But that's the question. Should everything be? Some things maybe shouldn't be. I don't know.
Meantime, Nvidia's Jensen, Huang, and AI executives from Google, Microsoft, Anthropic, and OpenAI all at the White House yesterday to talk AI energy needs. The goal was boosting public-private cooperation, try to make sure that energy and some other issues like workforce and permitting aren't blocking the build-out of AI infrastructure in the U.S. Our own Megan Casella caught up with NVIDIA's CEO after the meeting. He talked about the new industrial revolution that we're in with AI on energy. Specifically, he said that while AI models were a lot of energy to train, they can also save a lot of energy once they're in use. He also spoke about the company's Blackwell chips.
Every single generation, we try to increase the performance tremendously. And when we introduce new generations and the performance is 3-4 times higher, we're essentially reducing the cost of computing and reducing the cost of artificial intelligence by the same factor. And so Each generation reduces energy consumption, increases performance, reduces cost, and so we're in a hurry to get to Blackwell. We're in full volume production of Blackwell, and every company in the world is chomping at the bit, for us to ship it.
I don't recall seeing Jensen Huang in a suit and tie before. He's usually a little more casual, a little more.
He is famous for those leather black leather motorcycle jackets. So yeah, but a sign of the times is who is going to the White House these days, right? That's always you can go back over decades and see the kind of CEOs who show up at the White House and sort of demonstration of where we are in our economy.
AI matters.
Cheese will be next.
Coming up on Squawk Pod, it's China Week on Capitol Hill. Congress took up 24 bills on China this week, and Democratic Congressman Krishnamoorthi says tough policy on China is more important now than ever.
They like Donald Trump creating chaos or instability here within America. They liked January 6th. They liked the fact that Donald Trump helped to instigate that. And so I believe that they would favor Donald Trump across the bargaining table relative to them.
You're listening to Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin with Joe Kernan and Becky Quick on this Friday morning. Got a lot going on.
GOP vice presidential nominee J.D. Vance talking China with us yesterday right here on the set.
I do think that for 30 years in this country, we shipped a lot of good manufacturing jobs to places like East Asia. Now China makes some of the critical things that we need, antibiotics, prescription drugs, even, God forbid, the weapons that our troops would need if we went to war against a nation like China. So we have to be a little bit smarter about our own self-reliance as a nation. That is one departure, I think, between President Trump's vision and, frankly, 30, 40 years of failed leadership in this country.
U.S.-China policy has been a big focus on Capitol Hill this week. Members of Congress dove into key economic and national security issues, and joining us right now to talk about it is Congressman Krishnamoorthi of Illinois. He is the ranking member of the House China Select Committee. And Congressman, thank you, first of all, for being here. What did you think of China Week on the Hill?
Well, thanks so much for having me. I think China Week was weak on China. I think that it was notable for what it did not address. Nothing to significantly address the fentanyl crisis, nothing on critical minerals, nothing to repair our industrial supply base, and nothing to enhance our competitiveness, such as by fixing our immigration system or upgrading the skills of our workforce. So it was a big missed opportunity, Becky.
Why? What happened?
I think that unfortunately Speaker Johnson did not try to adopt the bipartisan approach that our committee has adopted with regard to these issues. Look, this is not lost on the Chinese Communist Party. They believe that we're hopelessly partisan, hopelessly divided and tribal. And so we have to play against type and come together on a bipartisan basis, united, with regard to our approach on these central challenges. And unfortunately, this week, the House Republican caucus took a different tack.
What happened? Because in the past, when we've had you on, there always seemed like there wasn't a lot of daylight between you and the Republicans on the committee.
I think that what happened was, unfortunately, Speaker Johnson decided to adopt certain proposals that just did not have support across Congress. And by the way, that included among even certain members of the GOP. And so because of that, I think that we missed the opportunity to, for instance, advance meaningful issues such as outbound investment controls, as well as restrictions with regard to other issues where, unfortunately, the Chinese are benefiting because of our lack of action. And so we have to take action now.
In terms of that, you think that this is because it's an election year? Or do you think this is not just an election year, a couple of months or 60 days, less than 60 days till the election?
I'm shocked that people would think that an election somehow influenced what's happening. Yes, I think that's absolutely what's going on. I think that unfortunately, Speaker Johnson has taken the approach that he wants to try to adopt certain policies that might curry favor with the GOP base, but that don't have widespread support in Congress. And when you don't have widespread support in Congress, you can't get anything done. And again, the Chinese Communist Party benefits from that. And I hope that we can take a different tack going forward.
Well, let me ask which candidate you think the CCP would prefer to see in the White House come January. And, you know, I would say China has probably, the Chinese Communist Party probably has not been thrilled with anything they've heard from either of these candidates. But I have heard the supposition that perhaps they like the idea of Trump there less because the tariffs he's talking about would be higher, and there is an instability factor. The CCP doesn't really love instability in looking at the nations that it competes with.
Well, so there's a famous book called America Against America, which was written by a guy named Huang. He's kind of one of the top 7 advisors to Xi Jinping in the Politburo. And his theory about America deeply influences Xi Jinping's theory of America, which is that we are hopelessly divided. And so when Donald Trump pits American against American, whether it's Republicans against Democrats or whether it's one, ethnicity against another, that plays into, China's theory about why we ultimately will not be able to compete against them. So I think they like Donald Trump creating chaos or instability here within America. They liked January 6th. They liked the fact that Donald Trump helped to instigate that. And so I believe that they would favor Donald Trump across the bargaining table relative to them. I think that the Biden administration has taken some really tough positions, especially with regard to controls on outbound investment, controls with regard to the export of key technology, which they deeply, deeply don't want, as well as increasing our deterrence in the South China Sea and with regard to Taiwan. So I think that all things being equal, I don't think they would be very enthusiastic about Kamala Harris becoming president.
Congressman Krishnamoorthi, thank you very much for joining us this morning.
Thank you so much.
Up next on Squawk Pod, amid pressure from an online activist, some brands are rolling back their diversity, equity, and inclusion efforts. Tractor Supply, Lowe's, Harley-Davidson, Brown-Forman, and others are all shifting priorities internally. The LGBTQ plus advocacy group Human Rights Campaign is responding to those shifts. President Kelley Robinson joins us.
While you may see Ford backing away, you have every other major auto manufacturer in this country that's participating in the CEI, from Chevy to Dodge to Subaru.
Welcome back to Squawk Box with Joe Kernan, Becky Quick, and Andrew Ross Sorkin. And we're diving into an ongoing story about some companies shifting their approach to diversity, equity, and inclusion. Here's Andrew.
Some major U.S. companies have begun walking back their internal diversity, equity, and inclusion policies. Ford's, Lowe's, Tractor Supply now, and others will stop submitting data to LGBTQ plus advocacy group, the Human Rights Campaign. Here with her response and some news to all of it, Human Rights Campaign President Kelley Robinson. So curious what you think of what's happening and what you think it means.
Look, these are short-sighted decisions. The Human Rights Campaign Foundation has been working for over 25 years in partnerships with companies across this country to make sure that they have best-in-class benefits for LGBTQ plus workers, to ensure that they're reducing the instances of harassment and discrimination in the workplace, to make sure that they are showing up for a community that has $1.4 trillion of buying power and represents 30% of Generation Z. Because by doing that, they are doing work not only to support the future of the workforce and the consumer base, but also to support their bottom line. So what we're seeing from these companies is short-sighted, and it's a wrong decision for businesses. That's why today we are announcing a 25-point deduction to the Corporate Equality Index scores for those companies that have rolled back their commitments to our communities. It's important that we have accountability here and that employees and consumers alike and shareholders too get to see the impact of these decisions on these companies.
So, Kelley, what do you think is happening? I mean, do you think it's just become politicized, and so some of the leaders of the companies that I just mentioned are on one political side of the aisle? Do you think that there is and there is a customer-facing issue where actually there are people who will buy products or not buy products based on some of these policies, or at least what their perception of these companies are?
I think that we're not telling the whole story here. Sure, there are a handful of companies that are making these poor, short-sighted decisions. But at the end of the day, in the 2025 CEI that will come out in early next year, we have over 1,400 companies participating, representing over 21 million employees across this country. That is the highest participation in our corporate equality index that we have ever had. So while you may see Ford backing away, you have every other major auto manufacturer in this country that's participating in the CEI, from Chevy to Dodge to Subaru. So what I want to make clear is that this is not where the majority of the companies are. And it's not just out of the kindness of their hearts. It's because they know that this is what the workforce and consumers demand. Look, employees are 4.5 times more likely to want to work at a company that is explicit in their support for the LGBTQ plus community. Consumers are 2 times more likely to want to buy from brands that support the community. This is, bottom line, the best thing to do for businesses. And that's why I think that we're seeing so much energy from employees, from consumers, and from shareholders starting to push back on these decisions that these companies have made.
Kelley, let me ask you about the Supreme Court decision as it relates to affirmative action at universities, and how you think that relates to corporate America, and whether you think that's impacted any of these decisions.
Look, there's no denying that there is a tension in the business community right now related to the political nature of some of these issues that are popping up. And unfortunately, it's nothing new. The same sort of narratives that we saw coming out of the Supreme Court are mirroring the horrific anti-LGBTQ plus policies that we've seen in hundreds of bills in states across this country. But at the end of the day, when I think about the work of the Corporate Equality Index, it is about trust, and it's about partnership with businesses to make workplaces as inclusive as possible for LGBTQ plus people. I mean, we're talking about healthcare benefits to ensure that people have all the opportunities to create their family, regardless of your sexual orientation, things like IVF and adoption benefits. We're talking about, before Bostock, working with companies to reduce discrimination in the workplace. This is not political. This is about people. It's about employees, it's about their consumers, and it's about the future of business. The reason that a lot of companies started to do DEI work was a risk mitigation tactic. There are financial and employment risks to having toxic workplaces. The CEI is a tool that we've used in partnership to help companies get better, to be their best selves, to get the best results from their employees and the highest outcomes from their consumers. That work is going to continue because over 1,400 companies, as I've said, understand the value in it.
Right. Kelley, though, I don't disagree with that. The question I would ask you, though, is, for example, how you think about what happened to Target, how you think about what happened to Bud Light, and what you think the implications of those situations are for other business leaders who watch those scenarios play out. And I would argue to those companies that actually have stepped away from some DEI programs, the ones we've discussed, they're looking at those examples and saying, is that going to happen to us? How should we think about that?
Absolutely. And I think that's where the partnership part comes in. You know, you've got some forces that are operating in the dark crevices of the internet, some extremists, some people with no business acumen or knowledge at all that are threatening companies. Meanwhile, you've got organizations like the Human Rights Campaign Foundation that are operating in the light of truth, trust, accountability, and transparency. We've partnered with companies like Target. We are partnering with over 1,400 companies across the board because we know at the end of the day, they've invested decades of work into increasing their inclusive practices in the workplaces because it is good for business. That work, despite the political moment that we're in, must continue. And I think that the risk of not continuing this work is at the peril of their business. I mean, we just released a report that said 80% of LGBTQ plus people are willing to boycott companies that step away from their inclusive practices for the community. 80%. Almost a fifth of LGBTQ plus workers are willing to either quit or look for a new job if their companies roll back their commitment. The risk is clear, and we're their partners in helping them to figure out the path forward.
Kelley, we want to thank you for joining us this morning. Appreciate it very, very much.
Bye. We'll see you next week.
Have a good weekend.
That's the podcast for today and for the week. Thank you for tuning in, as always. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC starting at 6 a.m. Eastern, and to get the smartest takes and analysis from that TV show right into your ears, you can follow us here on Squawk Pod, wherever you're listening now. We'll meet you back here on Monday. Have a great weekend.
We are clear. Thanks, guys.